Hi guys, in this installment of the Indicator series, I will be talking about the most famous two words in any students of technical analysis, support and resistance. You have just started out trading Forex or any markets and you heard of support and resistance. They say it's a basic concept, almost elementary, but almost all traders have no idea how to properly define, much less understand and use support and resistance properly. In this video, we will talk about number 1, what is support and resistance, number 2, what is the science behind support and resistance, number 3, what are the most common uses of support and resistance in a strategy. Shall we begin? Number 1, let's talk about what is support and resistance. Simply put, there are areas on the charts where prices tend to stop moving in its direction and reverses instead. Most of the times they hold, but support and resistance can break sometimes. In detail, a support is an area where prices tend to find, as the name suggests, a support as it falls. This means the price is more likely to bounce off this area. Think of support as a price floor where the ball is unlikely to break through. Resistance is the opposite, where the price tends to find resistance as it rises. Similarly, rising prices are likely to bounce off these zones as it approaches these areas. Think of the ball hitting the ceiling instead and drops back down when it hits the ceiling. Each of these support and resistance level can be tested, which means prices can literally examine the hardness or solidness of these levels. Most of the time, at least a higher time frame, and on the higher time frame, these tests fails and the level holds and the price bounces away. But these levels sometimes can break. It means that the tests are successful, and what happens after that is a support will turn into resistance, or resistance will then turn into a support. Think of the ball example I've given you before. If for some magical reason the ball breaks through the floor and goes one level down, from a ball's perspective, the floor now becomes the ceiling, right? Similarly, if the ball breaks through the ceiling and goes up a level higher, what happens? This time the ceiling becomes a floor to the magical ball. Prices behaves exactly like this magical ball does, and understanding this is key to knowing how to trade support and resistance. Now, unlike the magical ball in the example, there's nothing magical about these support and resistance that we often find in the charts. It does not work simply because you do them on the chart. There is an explanation to this phenomenon of support and resistance. So, number 2, what is the science behind this support and resistance? How does it work? Why should I believe in this theory? The most common phrase that you will hear when you discuss this support and resistance is that there is a lot of demand or buying pressure from a support level and a lot of supply or selling pressure in a resistance level. You have heard of this before. Let's expand on that. Imagine the traders in the entire market are divided into 3 categories: the longs, the shorts, and the uncommitted. The longs are traders who have already committed to the buy side, and the shorts have committed to the sell side. The uncommitted traders are those who are of the market who remain undecided as to which side to enter, long or short. They're not sure. Assuming that market starts to move higher from a support area where prices have been fluctuating for some time, now imagine you are one of those longs. You are now happy, but you would regret not having bought more, right? So if the market were to fall back into the same support area again, you would add to your long positions. When this happens on a global scale, massive scale, it forms buying pressure, number 1. Of course, when the price goes up, the shorts would realize that they are on the wrong side of the market. They are now making a loss. If you are the shorts, if you're one of them, you will hope that prices would go back down to the support area where you got in and close your position either with a small loss or a break even. This then forms buying pressure, number 2, when happen in large scale. Those sitting on the sidelines can be 2 types: those without a position and those with a long position held previously but now have decided to close their long positions for whatever reasons. 2 things happen here. Firstly, if they had no position before, they will now realize that prices are going higher and resolve to enter the market on the long side on the next good buying opportunity. Of course, when prices goes back to the support area, they will now get in. Secondly, those who for some reason liquidated previously held long positions in the support area, they are hoping for another chance or another change to reinstate those long positions they had and sought to buy again when price dips back to the support area. Collectively, they form the buying pressure, number 3. This happens on a global massive scale all the time. All 3 groups of traders are resolved to buy the next dip. All have a vested buying interest in that support area I just mentioned. Naturally, if prices do decline near the support area, buying pressures by all 3 groups will materialize to push prices up. The support area holds. Of course, the vice versa, where market prices drop from resistance area, can also be described in a similar manner. This is what happens when the support and resistance area hold. So what happens then when the support or a resistance area breaks? If due to whatever reasons the support or resistance does break, everything becomes just the opposite. All three groups of traders who bought in the support areas, for example, realized that they have made a mistake and now are closing their long positions. What created the previous support in the first place were the buying pressures. Now, however, all these buying pressures have become selling pressures instead. Support has now become a resistance area. In fact, the more significant the previous support was, the more potent it now becomes a resistance area. I've just explained to you what happens exactly when support and resistance holds or break. These back and forths happen in such massive scale and on such a fast pace that the underlying market psychology that is often ignored, replaced by the lines and rectangles on the chart. It is understood in a simpler way, yes, but when you lose sight of the meaning of it all, the market psychology behind it, it becomes meaningless. Appreciating what goes on in a market psychology is then key to understanding strategies that use support and resistance as the central system. Knowing these behind the scenes, after knowing this behind the scenes, let's move on and talk about number 3. What are the most common uses of support and resistance in a strategy? There are altogether 3 key uses. Number 1. Defining peak and troughs when identifying trends. What is an uptrend or a downtrend, or the multitude of small support and resistance in play? By identifying the support areas and resisting areas in an ongoing trend, you will be able to buy into uptrends from a support area and sell into a downtrend from a resistance area. This gives you a more precise entry as opposed to a naked chart. Number 2. Default stop losses and take profit levels. Support and resistance are often the favorite price levels watched by traders all over the world. By virtue of that, it's used to place your stops and your take profit levels so that your trades will have a higher probability of hitting the intended targets. Number 3. They provide buying and selling signals themselves. On its own, the support and resistance areas are itself a strong buying and selling signal provider, used by many traders who favor a simple but effective strategy. Combining support and resistance area with price action, for example, many traders take a trade where price indeed looks like there is a bouncing off a support and resistance area in short when there is a strong rejection. This third and most important use of support and resistance to provide entry signal is most often a foundation for other more complicated strategies such as a supply and demand imbalance strategy or breakout strategies. Well, there you go. Hopefully through this video you'll understand support and resistance better and appreciate it from another point of view instead of the usual charting technical analysis point of view. It's not merely an indicator that works simply because you drew them onto a chart, but because of herd mentality, mass market psychology, you know that these key levels of interest are indeed a powerful tool to predict the next direction of the price movement, and not just a charting jargon. In conclusion, buy at support, sell at resistance, but be careful, they can break easily. If you are interested in trading the support and resistance with high accuracy, join us in our advanced Forex technical analysis masterclass and trade with deadly precision. Improve your profitability by equipping yourselves with the most essential trading skills taught in Alpha Play Forex Trading School. I hope you have enjoyed our episode on the Indicator series. My name is JT and I hope to see you again in our next installment of Alpha Play's educational series next week.